Imagine waking up to a world where the stock market is on the brink of a major shift, and the fate of the global economy hangs in the balance. This is the reality we're facing today, as a batch of earnings from some of the biggest U.S. retailers kicks off, starting with Home Depot's disappointing quarterly results. But here's where it gets interesting. Despite the home improvement chain's lackluster performance, the market is still holding its breath as it waits for the results from other retail giants like Lowe's, Target, and Walmart. And this is the part most people miss. The economy has been surprisingly resilient to President Trump's tariffs, but the job market has slowed, and some measures of inflation are edging higher. As we delve into the world of stock market updates, it's essential to understand the complexities of the market and how it affects our daily lives. The stock market is currently in a late summer lull, with U.S. indexes near all-time highs, but only notching minor moves in recent days, with trading volumes depressed. Futures were muted early Tuesday, but Intel shares rallied pre-market on the news that SoftBank would invest $2 billion in the chipmaker. This boost from the Japanese technology investor comes as the Trump administration discusses taking a 10% stake in Intel, raising questions about the potential implications of such a move. But what does this mean for the average investor? To put it simply, the Trump administration's potential stake in Intel could have significant effects on the company's stock price and the overall market. It's a move that could be seen as a way to boost the economy, but it also raises concerns about government intervention in the private sector. Late Monday, S&P Global Ratings held the U.S.'s credit rating at AA+, the second highest notch on its scale, with a stable outlook. The ratings company said revenue from new tariffs would offset the Trump administration's tax cuts and higher spending. However, this decision has sparked controversy, with some arguing that the credit rating should be lower due to the country's increasing debt. Others argue that the stable outlook is a sign of the economy's strength. Separately, broader steel and aluminum levies came into effect in a significant escalation in Trump's metals tariff regime. Knives, electrical transformers, and hundreds of other finished goods are now subject to the 50% import duties. As we navigate the complex world of tariffs and trade policies, it's essential to consider the potential effects on the global economy. In recent trading, stock futures hovered, with the Dow Industrials moving less than 0.1% for a third straight session. Treasury yields wavered, with 10-year yields standing at around 4.33% after 3 sessions of gains. European defense stocks and international oil prices fell as investors assess the possibility of a ceasefire in Ukraine. Trump is pushing for a 3-way meeting with Ukraine's president and Russia's Vladimir Putin, raising hopes for a peaceful resolution to the conflict. But what are the implications of such a meeting, and how could it affect the global economy? Bitcoin prices dropped below $115,000. As the cryptocurrency has weakened since Treasury Secretary Scott Bessent said last week the U.S. doesn't plan to buy more assets for its Bitcoin reserve. As we consider the future of cryptocurrency, it's essential to ask, what does this mean for the future of digital currency, and how will it affect the global economy? The world of finance is complex and ever-changing, and it's crucial to stay informed to make smart decisions. So, we ask you, what do you think about the current state of the stock market, and how do you think it will affect the global economy? Do you think the Trump administration's potential stake in Intel is a good idea, or do you have concerns about government intervention in the private sector? Share your thoughts in the comments below, and let's start a conversation about the future of finance.